Hello friends, good evening and welcome to Super Coaching Regulatory Bodies by Testbook, and also welcome to the series of Ecologics where we are discussing the most important concept of economics. And friends, we have started the discussion around the monetary policy where we have discussed what is the monetary policy, what are the major objectives of monetary policy, what are the tools that are available with the Reserve Bank of India to achieve the objective of monetary policy. So we have discussed all these things. So today the topic that we are going to discuss is types of monetary policy. The monetary policy के कितने types होते हैं that we are going to discuss, ठीक है, and how RBI uses that we will also be discussing as a part of this topic. So let's begin that without wasting much time. But friends, here you can see the schedule. You know very well the importance of current affairs in the regulatory bodies examination. So we have started the series for the current affairs, where we are covering all the possible areas which are asked in the regulatory bodies examination. For example, PIB current affairs, finance current affairs, RBI updates, government schemes, ESI current affairs, important reports. So these all are the areas that we would be covering in our current affairs series. So schedule you can see in front of you guys. PIB current affairs session is conducted on every Monday at 6 p.m. by Pushpak Sir. Finance current affairs session is conducted on every Tuesday at 6 p.m. by Madhav Sir. RBI update session is conducted on every Wednesday at 6 p.m. by Madhav Sir again. Government scheme session is conducted on every Thursday at 6 p.m. by me, Prakash. ESI current affairs session is conducted on every Friday at 6 p.m. by me again. And important report session is conducted on every Saturday at 6 p.m. by Mahesh Sir. So this is how we are going to cover the current affairs, guys. बहुत important session है. They will be beneficial for the preparation of regulatory bodies examination. Now guys, so today's agenda is the types of monetary policy, right? Types of monetary policy we are going to discuss. What are the different types of monetary policy? But before that, it is important to understand the major objectives of the monetary policy, which we have discussed in the previous sessions as well. So monetary policy is the macroeconomic policy. You know very well, it is laid down by the Reserve Bank of India. In our case, that is central bank of any country. So the ultimate objectives that RBI has to achieve by using the monetary policy is number first is maintaining price stability, which is nothing but inflation. So maintaining price stability, number first. And number second is ensuring economic growth. So these are the two major objectives of the monetary policy, that is maintaining price stability in the economy and ensuring economic growth. Now, in order to achieve these objectives, what RBI does basically, RBI manages money supply and the interest rates in the economy. Here you can see RBI manages money supply and the interest rates in the economy in order to achieve these two objectives. So whenever RBI takes any step, RBI keeps in mind these two objectives that RBI has to achieve by using the monetary policy. So in order to achieve these two objectives, RBI manages money supply as well as the interest rates in the economy. And why this is so? Because they are directly related to the in controlling inflation as well as ensuring economic growth. And this we have already discussed in the previous sessions. We have discussed multiple tools as well. So friends, in order to manage money supply and interest rate in the economy, RBI has different weapons, or we can say RBI has different tools. So RBI has different weapons. For example, these are the tools that RBI has and which RBI uses to manage credit supply in the economy as well as interest rate in the economy. So guys, these are the tools that we have already covered: cash reserve ratio, SLR, repo rate, reverse repo rate, standing deposit facility, marginal standing facility, then further bank rate, open market operations. So these we have already discussed in our previous sessions. So they are known as quantitative tools of monetary policy. Now the topic that we are going to discuss today is the basically types of monetary policy. So there are two types of monetary policy. Number first is expansionary monetary policy and number second is the contractionary monetary policy. So what is the difference between both expansionary and contractionary monetary policy? Guys, whenever we talk about monetary policy, so monetary policy is all about money supply, right? You have to remember monetary policy is all about money supply in the economy. Money supply in the economy, right? So whenever we are talking about the different types of monetary policy, so we are talking about expansionary monetary policy, which means increase the money supply in the economy. And second is the contractionary monetary policy, which means reduce the money supply in the economies. This is the basic, these are the two types of monetary policy which RBI takes stance over the period of time on a regular basis. Whenever there is a high inflation in the economy, RBI feels that there is a high inflation in the economy and RBI has to control the inflation in the economy, then in that case RBI focuses on the contractionary monetary policy. This is the first objective. We have discussed two objectives of monetary policy: ensuring economic growth as well as maintaining price stability. So whenever RBI feels that there is a high inflation in the economy, so RBI adopts contractionary monetary policy. But wherever RBI focuses on economic growth, which means RBI focuses on more production in the economy, then in that case RBI focuses on expansionary monetary policy. Now the important question is, what are the crucial steps that RBI takes as a part of expansionary and contractionary monetary policy? So this is what I am going to tell you. So friends, if I tell you about the expansionary monetary policy, and I already told you that expansionary monetary policy means there is an increase in the money supply in the economy. So whenever RBI focuses on increasing money supply in the economy, which means RBI taking the stance of expansionary monetary policy. So number first is decreasing interest rates. Okay, what are the interest rates that I will tell you? Decrease the interest rates. Then second is the reduce reserve requirements, and third is the expand open market operation. So let's understand this. You know very well, we have discussed multiple tools, different weapons that RBI has to control money supply as well as ensuring economic growth in the form of cash reserve ratio, SLR, repo rate, reverse repo rate, SDF, MSF, bank rate, open market operations. So these all are the weapons, these all are the tools that are available with the Reserve Bank of India, and RBI uses it on a regular basis. So when we are talking about the expansionary monetary policy, which means RBI is focusing on the growth. RBI is focusing on the second objective, that is economic growth, right? So in the case of economic growth, basically RBI adopts expansionary monetary policy. Expansionary monetary policy is adopted by Reserve Bank of India whenever RBI feels to focus on economic growth. So as a part of expansionary monetary policy, what RBI does basically, as we have discussed here, RBI decreases interest rate, right? So for example, here you can see, if I tell you about the repo rate, if I tell you about the repo rate, if I tell you about the reverse repo rate, if I tell you about the SDF, if I tell you about the MSF, so through these basically RBI manages interest rates in the economy, right? So what will happen basically here, you can see in the case of repo rate, RBI will reduce the repo rate. What will happen when RBI reduces the repo rate? When RBI reduces the repo rate, which means now banks can take easily a cheaper loan from the Reserve Bank of India, which means there is an increase in the money supply in the economy. When money supply is increasing in the economy, so interest rate will come down in the economy. And when interest rate will come down in the economy, which means there will be an increase in demand in the economy. And in order to cater that demand, in order to fulfill that demand, producer has to produce more. So increase in the production will be there. And increase in production means there is an increase in the GDP, and which means there is an economic growth. Right? So this is how this mechanism works. Second is basically, again, in the case of reverse repo rate, also what RBI does, RBI reduces the interest rate, that is the reverse repo rate. Then what will happen? Instead of keeping their cash with the RBI, commercial banks choose to give it to the public, because now Reserve Bank of India is providing very low interest rate on the deposit that is to be made by commercial banks. So in that case, commercial banks choose to give it to the public, right? So in that case, money supply will increase, the same will happen, interest rate will decrease, that will result into increase in demand, and that will result into increase in production and result into increase in GDP, which means economic growth as well. Similarly, when we talk about the SDF, standing deposit facility, again, when SDF is reduced by the Reserve Bank of India, which means now banks hesitate to keep their fund with the Reserve Bank of India, since it is providing very less interest rate on the money parked with the Reserve Bank of India. So they, instead of focusing on keeping it with Reserve Bank of India, they choose to give it to the public. So what will happen in turn? There is an increase in the money supply. Same cycle will happen, because now banks have more fund to lend, because they are not depositing their money with the Reserve Bank of India, since RBI is paying less interest rate. So when they are having more money supply, which means they will give it to everyone in cheaper interest rate, which will lead to increase in demand, that will lead to increase in production, and that will lead to increase in GDP, which means ensuring economic growth. Similarly, in case of MSF, when MSF is reduced, which means now banks can take loan from the Reserve Bank of India under the marginal standing facility in a cheaper interest rate, which will result into increase in money supply because they will take more loan from the Reserve Bank of India and they will give it to the public. So there will be increase in money supply leading to cheaper interest rates, leading to increase in demand, increase in production, and the increase in GDP, which is economic growth. So this we have already discussed. This we have discussed multiple times in the previous sessions. That is why I'm making you understand here in a brief manner, right? So this is the first part, that is the decrease interest rate. Second is the reduced reserve requirements. Reserves, what are the two reserve requirements? Basically, CRR, that is cash reserve ratio, and the SLR, right? CRR and the SLR is there. So what will happen? RBI, when RBI will reduce the CRR, so what will happen now? Banks need to keep less cash with the Reserve Bank of India. Means they are having more cash to lend it to the public. So which means increase in the money supply. Decrease in CRR which will lead to increase in money supply because now banks have the mandate to keep less cash with the Reserve Bank of India, which means they are having more cash to lend to the public. So there will be increase in money supply and the cycle will repeat again. Interest rate will decrease in the economy, leading to increase in demand, leading to increase in production, and leading to increase in GDP, which means economic growth will be there. So in all these cases, you can see there is an increase in the money supply. That is why we are calling it a expansionary monetary policy, because money supply is increasing here. In all the cases, you can see money supply is increasing, and when money supply is increasing in the economy, then in that case what will happen? Basically there is a increase in the production. Similarly, SLR, when RBI reduces the SLR, then what happens? Basically here, when RBI reduces SLR, then there is an increase in the money supply because now banks have to keep less cash with themselves in order to fulfill the mandate of statutory liquidity requirement that we have basically already discussed. So there will be increase in the money supply leading to the same cycle that we have discussed. So this is how the cycle basically works, and this is how RBI adopts expansionary monetary policy, and RBI helps to increase money supply in the economy. Number third is expand open market operations. OMOs we have already discussed, open market operations. So as a part of expansionary monetary policy, what RBI does, basically RBI start purchasing. Okay, RBI start purchasing government securities, because in the open market operation we have discussed what RBI does. Basically RBI purchase and sell the government securities. So as a part of expansionary monetary policy, RBI will start purchasing the government securities, which in turn will lead to increase in money supply. क्योंकि जब RBI यहाँ पे purchase करेगा तो बदले में पैसे तो देगा ना. That will lead to increase in money supply, and when there is an increase in money supply, that will lead to decrease in interest rate in the economy, leading to increase in demand in the economy, which in turn leading to increase in production in the economy and increase in the GDP in the economy. So this is how the overall cycle works. This is how the money supply is manipulated, or money supply is influenced by the Reserve Bank of India through the expansionary monetary policy. So in all the cases, you can see that there is an increase in the money supply, right? And that is why it is leading to increase in the economic growth. Second types of monetary policy is basically contractionary monetary policy. And I told you contractionary monetary policy means reducing the money supply in the economy. So reverse will happen here. The interest rate will be increased by the Reserve Bank of India. The reserve requirement will be raised by the Reserve Bank of India, and RBI will start selling the open market government securities in the open market operation. Let's discuss that also. So in the case of inflation, when RBI feels that there is a high inflation in the economy, so RBI takes the instance of contractionary monetary policy. RBI takes the instance of contractionary monetary policy. And what is the contractionary monetary policy? Basically, to reduce the inflation, what RBI will do? RBI will reduce the money supply in the economy. That we have already discussed. So, number first, what we have discussed, that there will be an increase in the interest rate. So, if I tell you about the interest rate, so here you can see repo, reverse repo rate is there, SDF is there, MSF is there, right? So, what will happen as a part of this? How RBI will use these tools? In the case of contractionary monetary policy, so RBI will increase the repo rate. When RBI will increase the repo rate, which means now banks have to pay higher interest rates in order to borrow the money from the Reserve Bank of India. So which in turn RBI, the commercial banks will avoid taking loan from the Reserve Bank of India, which means there is a less money supply in the market, right? Money supply will reduce in the economy, and when money supply will reduce in the economy, which means that will lead to increase in the interest rate. Why this is so? Because now commercial banks have very limited funds. So they will give the loan to them, those who will be able to pay higher interest rates. So that is why interest rate will be increasing in the economy. That will lead to decrease in demand, because whenever there is a high interest rate in the economy, we as a common people will avoid our plans. We will procrastinate our plan of buying house, buying car, buying loan, buying iPhone, because we will wait for few more months, right, in order to interest rate to come down. So there will be decrease in the demand in the economy, and when demand will decrease, which means price will decrease, right? Because जब demand ही नहीं रहेगी तो चीजों के price कम होंगे, and that is the achieving of first major objective, that is controlling inflation in the economy. Right, this is the first mandate, that is the monetary policy that we have discussed, the first major objective, that is controlling inflation in the economy. And this is how, by using the contractionary monetary policy, RBI will control inflation. Similarly, when we talk about the reverse repo rate, so what will happen? RBI will increase the reverse repo rate. So what will happen now? Instead of giving loan to the public, commercial banks will focus on keeping their cash with the Reserve Bank of India. Reason being that because if they are giving loan to the public, there is a high chance of default, right? But if they are keeping the money, if they are giving the money to the Reserve Bank of India, there is almost zero chance of default, right? So that is why commercial banks will choose to park their fund with the Reserve Bank of India. And also, since Reserve Bank of India is providing more interest rate, higher interest rate as a part of increased reverse repo rate, so banks will focus on keeping their money with the Reserve Bank of India only. Right. So what will happen when there will be an increase in the reverse repo rate? So bank will switch their money, bank will transfer their money from themselves to Reserve Bank of India, which will lead to decrease in the money supply in the economy, and that will repeat the cycle. Interest rate will increase in the economy, that will lead to decrease in the demand, and that will lead to decrease in prices, and ultimately RBI will end up controlling the inflation. Right. Similarly, when we talk about the standing deposit facility, so RBI will increase the standing deposit facility. So ultimate accounting will be same in case of reverse repo rate and in the case of standing deposit facility, as we have discussed also in the previous as well. Because here what is happening here, because if I talk about reverse repo rate and the SDF, so what is the major difference? That is the collateralization, right? So in the case of reverse repo rate, there is collateralization of government securities is involved, but when we talk about the standing deposit facility, so collateralization is not involved, right? So when SDF will increase, so what will happen? Bank will start parking their funds with the Reserve Bank of India, because RBI is now paying higher interest rate, so which will lead to decrease in money supply in the economy. That will in turn lead to increase in the interest rate in the economy, and that will in turn lead to decrease in demand, decrease in price, and ultimately it will end up controlling the inflation in the economy. Got it? Similarly, if I tell you about the MSF, so RBI will increase the MSF. When RBI will increase the MSF as a part of contractionary monetary policy, then what will happen here? Now banks will not be able to afford taking loan from the Reserve Bank of India, because now if they are taking loan under the marginal standing facility, they have to pay higher interest rates, which will lead to decrease in money supply in the economy, and ultimately same cycle will repeat, that is increase in the interest rate, decrease in demand, decrease in price, and ultimately controlling inflation. Guys, those who are attending this session for first time, you might face difficulty. Reason being, these all tools, these all effects we have already discussed in the previous session, right? So we have already discussed in the previous session, so you may face difficulty with respect to that, right? इसलिए पिछले वाले सेशन जरूर देखिए, वहां पे आपको ज्यादा अच्छे से चीजें समझ में आएंगी, ज्यादा अच्छे से आपको क्लैरिटी आएगी. तो यहाँ पे ये जो लेक्चर है आपको डेफिनेटली बहुत अच्छे तरीके से समझ में आएगा, राइट? So this is the first part that we have discussed. Second is the raise reserve requirement. Second, we have discussed raise reserve requirement. So in the case of reserve requirement, as we have seen, contractionary monetary policy, what will happen? CRR and the SLR, right? CRR and the SLR are two reserve requirement that we have discussed. तो यहाँ पे क्या होगा? Basically, RBI will increase CRR, which means now commercial banks have to keep more funds with the Reserve Bank of India in order to fulfill the mandate of cash reserve ratio, which means now banks are having less money supply with them, जिसके चलते यहाँ पे वही इफेक्ट होगा. देयर विल बी इंक्रीज इन द इंटरेस्ट रेट, डिक्रीज इन डिमांड, डिक्रीज इन प्राइसेस, एंड अल्टीमेटली कंट्रोलिंग इन्फ्लेशन. एसएलआर की बात करें, सो एसएलआर विल आल्सो बी इंक्रीज्ड एज अ पार्ट ऑफ कॉन्ट्रैक्शनरी मॉनेटरी पॉलिसी बाय द रिजर्व बैंक ऑफ इंडिया. एंड आफ्टर दैट व्हाट विल हैपन? बेसिकली व्हेन देयर इज एन इंक्रीज इन द एसएलआर, उसके बाद क्या होगा? यहाँ पर जब एसएलआर यहाँ पे बढ़ेगा, तो अल्टीमेटली यहाँ पे बैंक्स, commercial banks need to keep more cash with themselves in order to fulfill the mandate of statutory liquidity ratio. So यहाँ पे money supply will decrease again. That will lead to increase in interest rate, and that will lead to decrease in demand, decrease in prices, and ultimately controlling inflation, right? So this is how basically the expansionary monetary policy and contractionary monetary policy works basically, right? Now, third is the major important thing, open market operation. So how with the help of open market operation, RBI will focus on contractionary monetary policy. So as I told you, whenever there is a high inflation in the economy, so RBI will focus on reducing the money supply in the economy. So with the help of open market operation, RBI will start selling the government securities. RBI will start selling government securities. So what will happen when RBI will start selling government securities? So at that time, when RBI will sell the government securities, those who will purchase, they will give money to the Reserve Bank of India, which means liquidity will be absorbed. Liquidity will be absorbed from the market. Liquidity absorbed from the market, which means now people have less cash in their hand, and if they are having less access to money, then in that case what will happen, they will demand less, because आपके पास पैसे नहीं होंगे तो आप डिमांड कम करेंगे, and if you are demanding less, which means that will lead to decrease in the prices of goods and services, and that will ultimately lead to controlling inflation. ठीक है जी. So this is how basically the things happen. यहाँ पे इस तरीके से सारी चीजें होती हैं. Got it? तो इस तरीके से expansionary and contractionary monetary policy works. These are the two types of monetary policy, that is expansionary and contractionary monetary policy, and this is how RBI takes step of contractionary and expansionary monetary policy in the case of ensuring economic growth and in the case of controlling inflation in the economy. I hope you have understood. So those who are not understanding the concept, guys, you must watch the previous sessions because they are very, very important. We have discussed each and every tools in a very detailed manner so that you can easily understand the concept. बहुत ही अच्छे तरीके से हमने चीजों को वहां पे कवर किया हुआ है. सारे प्रीवियस सेशन जरूर देखिए. इकोलॉजिक्स जो हमने सीरीज स्टार्ट की गाइस, उसका मेन पर्पस ही ये है कि वी कैन डिस्कस द मोस्ट इंपॉर्टेंट कंसेप्ट ऑफ द इकोनॉमिक्स, सो दैट व्हाटएवर फोबिया यू हैव इन योर माइंड विद रिस्पेक्ट टू दिस कंपोनेंट, दैट कैन बी फेडेड अवे, राइट. तो यही हमारा बेसिकली यहाँ पर फोकस है, एंड दैट इज व्हाई एज अ पार्ट ऑफ दिस सीरीज वी आर डिस्कसिंग मोस्ट इंपॉर्टेंट कंसेप्ट इन अ वेरी लेमन लैंग्वेज सो दैट यू कैन अंडरस्टैंड द कंसेप्ट. सो दिस विल बी इंपॉर्टेंट फ्रॉम द अंडरस्टैंडिंग पार्ट एज वेल, एंड दिस विल बी इंपॉर्टेंट फ्रॉम योर एग्जामिनेशन पॉइंट ऑफ व्यू एज वेल. Right, so this is all with respect to today's class that we have discussed expansionary and contractionary policy. And guys, we have launched this RBI Grade B Lakshya Batch. You might be aware about this, that we have launched the foundation course for RBI Grade B 2025 examination, that is Lakshya Batch. And as a part of Lakshya Batch, we are providing you n number of live classes which will help you to build your foundation, as well as after building the foundation we will take you to the requirement of the examination. So here our focus is not only completing the syllabus, rather enriching your knowledge, so that will be helpful throughout your career in whatever organization you are associated with. That knowledge will definitely be helpful for you throughout your life, right? So Lakshya Batch ka, as a part of Lakshya Batch, you will be getting here live classes, you will be getting here notes, you will be getting here MCQs, you will be getting here descriptive writing, which is a very major component in the phase 2 of RBI Grade B examination. You will be getting one-on-one mentorship, and also you will be getting the interview guidance program. So each and every aspect will be covered as a part of foundation batch, and that is why it is known as foundation course. So in order to subscribe the course, guys, you can simply use the coupon code Prakash. So this is my name, and this will also work as a coupon code. So when you subscribe the course, when you visit testbook.com and you will start subscribing the course, so you can apply the code Prakash. So after applying the code, you can see a drastic discount in the final prices, and that will make the course more affordable for you. And guys, classes have already started for phase 1. phase 1 की classes start हो चुकी हैं. phase 2 की classes will start very soon, so you can check the schedule as well by checking the course, and the link of the course is given in the description of this video. And friends, one very, very important announcement, that in the description of this video we have provided a Google form. So whatever doubts, whatever queries you have, whatever you want to ask with respect to RBI Grade B examination, you can simply fill that Google form, and our team will get back to you so that they can resolve your query, right? So do not forget to fill the Google form if you have any query, any doubt with respect to this, so that our team will get back to you and will resolve your query. And one more important information is that this is the scanner of my personal Telegram group, guys. So do join this Telegram group. After joining this Telegram group, you will feel enriched, because here we are sharing some important updates, and whatever doubts you have, you can directly post in the group, and I'll personally be taking care of that doubt. So after joining this group, you are not supposed to post your query to someone else. You are not supposed to mail your query to someone else, and you are not supposed to wait for 2-3 days, right? You can immediately get the reply of your query on a real-time basis. So once you join this Telegram group, this is my personal Telegram group, your query will be resolved. And also along with that, I also provide regular updates on the group itself whenever I feel that this is important for the examination, चाहे वो session हो, चाहे वो कोई particular examination हो. So each and everything is shared in the group itself. So this is all for this session, guys. I hope you enjoyed the class. So we'll meet at 5:30 इन अवर मास्टर क्लास में हम मिलेंगे अभी यहाँ पर, जहां पे हम इंपॉर्टेंट एमसीक्यूज डिस्कस करने वाले हैं विद रिस्पेक्ट टू द आरबीआई ग्रेड बी फेज 2 एग्जामिनेशन. So goodbye and happy learning, guys. We'll meet you in another session. Till then, goodbye and happy learning, friends.